The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, I'm Jeff Gibby over at MetaStock. Thanks for watching the video. It's good to see you. Thanks for joining us today. I'm going to go ahead and kick us off. I want to say a couple of things as we get started. If you have questions, please ask. I've got both the questions in GoToWebinar and in MetaStock open and ready to look at. So let's see, other things. If you're watching us on YouTube, you enjoy the video, let me know in the comment, or make sure to like and subscribe. It helps a great deal. So let's go ahead and kick things off. We'll get underway. It's good to see you. Thanks for coming. Thanks for watching the video. All right, let's go. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock does not endorse the purchase of a security, nor is it paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So there you go. Good having you. I want to talk a little bit about just who I am. A lot of you may know who I am already. I'm not going to spend a lot of time, and I'm certainly not going to read all these bullet points to you. But my name is Jeff Gibby. I started working here in MetaStock in 1997, so I've been here for some time. It's been a great place to work. I very much enjoy it. I trade very actively every day, and I really enjoy that. When I started, I didn't know anything about stocks or technical analysis or anything. For about 10 years or so, I worked in inside sales, and I talked to a lot of people that were looking to get the software, maybe looking to improve the way that they're trading, whether that might be stock selection or testing ideas, or maybe even just learning a little bit more about what they're doing. And from that perspective, it was a great experience. I learned a lot about the markets, started trading, that kind of stuff. After that, and since then, I've been kind of doing a lot of other stuff, kind of more on the business side. I run all of the big conferences we do. I run our business development and our partnership programs worldwide. in charge of sales. That's been a lot of fun as well, and I've had a chance to learn a lot more. I will say a couple of things about working for MetaStock. It's a very well-established, well-reputed company. I enjoy that, and it's great to be an employee for MetaStock. I absolutely love it. So, if you haven't read some of the finer points on this, MetaStock's been established since in the 1980s. When I started in '97, we had been owned by Reuters. We've been owned by Reuters for a couple of years. We still have a great relationship with the people that kind of created the Reuters product. It's now all owned by the London Stock Exchange Group, but it's some of the best news and information available on the planet. We purchased our stuff back from Reuters, so 2013. And if you've been a long-time MetaStock user, thank you. If you've noticed kind of a big increase in terms of the stuff that's getting done and the software, that's exactly why. We've been able to really, really focus our efforts on making our software better. So in any case, I'm not going to talk too much about MetaStock today. Well, actually, I'm going to talk a lot about MetaStock today, but the one thing I want to say before we kind of get in there is 32 years in a row, MetaStock's been rated the best software program. It's been rated by that in its price category, and it's been rated that by the readers of Stocks and Commodities magazine. So today's a little bit different, though. Today's demonstration is kind of geared more to existing users. One of the things that I've noticed over the years is that so many people, there's been so much development work and so much development effort that's been put into MetaStock. There's a lot of things that it's easy to kind of get lost in the shuffle. And as such, systems, methodologies, stuff like that. What kind of this series is, and there's kind of a few of them in here, but this series is kind of designed to highlight those features that maybe I myself personally like the most. So just a great poll, Greg, too. I like that one. I'm going to put yes on mine. I'm curious also. I'm sure kind of based on the description and kind of a lot of the people that are watching this are MetaStock users. If you're new to MetaStock, or if you haven't started using MetaStock yet, let us know. Fill out the chat if you're watching YouTube, or just let me know in the comments. I'm new to MetaStock. So in any case, the first thing I want to talk about, there's really kind of three items I'm going to cover. I'm going to try and kind of keep it shortish. I'm going to try and keep it within about an hour, but there's three kind of methodologies or three systems in MetaStock I'd kind of like to show you. I think you should play with them. I think they're very, very cool. And we're going to start not with this one. This is actually a setup for the next thing I want to show you. But we're just going to spend some time in MetaStock. And if you have questions on MetaStock, feel free to ask them. The first thing I want to show you, though, is a system that's based on automatically putting support and resistance levels on the chart. Okay, a lot of people look for stocks. They want to find stocks that are breaking up above support. Up above resistance or down through support. And we have some tools that kind of help you. The big problem with that is, where do we identify where that support is? How do we find that on the chart? The other big problem of that is, once we've drawn those on the chart, how do we find stocks that are breaking through those levels? And so those are two things that we're going to kind of play with a little bit today. So I'm going to jump straight into MetaStock. I've got a chart of GE here. No particular reason. I was kind of looking at the pullback on GE. We were looking at kind of some screenshots. But what I want to do is actually want to show you a tool that's been in MetaStock for a while now. I think we started to include it in MetaStock 10. That is designed to help you identify stocks that are breaking through support and resistance, through trend lines, whether those are up trend lines or down lines, and on a shorter term or a longer term basis. So I've got GE open. I've already got the chart open. If you want to get to this template, the template that I'm going to apply to the chart is going to apply all of these indicators so we can see what they look like. The name of the template is called I think it's called Dynamic Trading Tools. So what I'm going to do here is I'm just going to kind of come over to a blank area of the chart. I'm going to right click. I'm going to apply the template, and it's going to list all of my ones, but I'm going to go down to Dynamic Trading Tools. Okay, I'm going to go ahead and apply this as a template. It's going to go ahead and put it up there for us, and it's going to identify. Oh, first let's go online. It looks like I've lost my online data connection. Let me go ahead and go online so we can kind of get that data. Shouldn't take very long. Let me go ahead and hit refresh here so we can grab that data. But what this is going to do is it's going to help us identify where the support and resistance levels actually are. So let's go MetaStock. Okay, it's coming. Good. Okay, I'm going to just make some quick changes with this if you've been using MetaStock for a while. what I want to be able to do is show you a little bit more. There are lines on here. You can almost see them. There's a longer term support level resistance area here that's been drawn, shorter term resistance level here, but I want to make these a little bit more evident on the chart. So I'm just going to real quickly take all these levels, and I'm going to go in, I'm going to double click, I'm going to kind of increase the weighting on them. They're hard for me to see. I'm blind in this eye. I can't see out of this eye. And I'm sure over the internet, they're a little bit harder for you to see as well. So let me just make them bigger, and like a lot bigger. So I'm just going to double click on them real quick. I'd already done this, but I thought what I had done is actually save these already. So anyway, in any case. Okay, all right, now you can see it for sure. What these indicators are going to do is they're going to kind of look and identify where they see a trend line based on the algorithm, where they see support, where they see resistance, and they're going to do that in some different flavors. So I'm going to kind of come back here. You can kind of see where this shorter term resistance level has been kind of moved over time. You can see where this major resistance level has kind of been plotted, and we found a new major resistance level just right about here, actually right here. Okay. Same thing with the shorter term. The short term's right here. The longer term support is right here. Okay, so it's identifying that. It's not right now finding any of the up trend lines or down trend lines. There's nothing that kind of matches the algorithm for that. If it did find it, it would actually display them on the chart. You'd be able to see them on the chart as well. And I'm actually going to make this one a little bit larger as well. Now, a lot of people, myself included, like to find stocks that are coming through kind of these resistance areas. It's usually a really good time to buy a stock. Once you get through resistance, you can treat it as support. You can put your stop under it. The turtle traders actually looked at support and resistance breakouts, and that's how they identified their trades. So the fact that these are automatically calculated means that they're findable as well. So obviously, like if I was looking for this to break up above its longer term resistance channel and had a stop loss, that might have been a really good strategy to kind of take some profits out of this trade. The question is like with how do we find this when they're a little bit closer to the breakout levels right here? And for that, of course, the answer is going to be scanning. The scan on this one's a little bit different, and so I want to show you that as well. So let me go ahead and open up the Power Console right now. I'm going to go to the scanner, and what I'm going to do is I'm going to go ahead and I'm just going to, in the search box for the scans that are available, I'm going to look for dynamic or DT. It starts with DT. Okay. So we've got DT support and resistance. If I want to find stocks that are breaking through that longer term support and resistance level, this is the scan that I'd run. Shorter term, that would be this scan here. Trendline breakouts, longer term and shorter term would be right here as well. Okay. We won't run all of these scans. I just kind of want to give you an idea of how it works. And it is a little bit different than some of the other scans. So I kind of really want to do a scan right now. To keep things kind of quickly, I'm going to run this exploration. I'm going to run it against the Dow Jones Industrials, the NASDAQ, and the S&P. I don't know why the 600 is selected. Let's do the 500, and we'll just go ahead and run that scan. So what this program is now doing for us, and it's not taking very long. It's going to go in. It's going to load all of the data for the chart. So it's going to look to see what the support and resistance level is. It's going to identify those stocks that have broken recently through a support and resistance area. And it's going to tell us how many bars ago that was. And it's done. Okay. Let me go ahead and kind of make this a little bit bigger right now. Okay. And we'll just kind of walk you through the report. Like I said, the report's a little bit different. Okay. Right here, you've got the name of the company. We've got 267 results. Okay. There's a reason, a lot of times when you do a scan, it's like maybe a handful come through. There's a reason there's that many. So here you got the name of the company, what the current close price is, whether it's a break up above resistance or a breakdown through support. And when that breakup happened, was it how much percentage of the average volume was it, or when the breakdown happened, how much was the volume, or how much was the volume, was it compared to average? Did it break through that resistance with strong volume or less volume? That's what that's going to tell you. And here's a symbol. So a lot of times when you look at a scan, it's going to give you a 1 or a 0, meaning, hey, there's a breakout or there's not a breakout. This scan was done a little bit differently. What it's going to give you is a number. So if we look here at 3M, it says 142, and under the breakup column, it says 28. Okay. What that means is if I opened up the chart at 3M and applied that template 28 bars ago, this stock would have broken through that resistance level. Okay, so what I'm going to do is I'm actually going to find something that's a little bit more recent than 28, certainly a little bit more recent than 664. What I'm going to do is I'm going to sort this in a descending order, but I'm going to go in and let's find the stocks that have broken through that area in the last, I don't know, 5 bars maybe. So let's go here. Let's go up a little bit here. Right here we've got, well, in terms of broken through resistance, 5 bars ago it was Conoco Phillips. Okay, so if I'm looking at this here, the close price of Conoco right now is 93. About 5 bars ago, it broke through its resistance area. The volume on that was only about 3.74% of normal. So we can kind of take that into account before we take a look at it. We also had Oracle right here. It broke through that long-term resistance 4 bars ago with 429% volume. That kind of sounds interesting to me. You've got Quest, Equity Corporation, CF, and now we're down to about 3 days. So let's take a look at Oracle simply because of the percentage of volume that actually breakout that happened with. All right, and I'm going to go ahead and just open up the chart and we'll take a look at it. So I'm going to go ahead and do this. Okay, I'm going to go ahead and make this a little bit smaller. We've got Oracle. I need to change the template. What I'm going to do is I'm going to go ahead, right click on that, apply that DT template, that dynamic trading tools template. We'll go ahead and click on apply. And we can see right here, we had a gap right above support, huge amount of volume, and it kind of shot up after that. And it's kind of been going in a consolidation pattern since then. So there you go. That's a good way to find stocks that are breaking through support and resistance. With this one, I want to point out, actually, too, since it came up, we have a bit of a downtrend line here. I'm going to go ahead and kind of make this a little bit bigger so you can see it. Right here, you see kind of this sloping down line. Okay, it was formed off of these 2 points. If it finds a trend line, it's going to draw it on the chart for you, which is also, so this one was formed off of maybe this point and this point and went down. We broke up through that trend line here. Okay, it also found an up one right here based off of these 2 lines. So if it finds the support and resistance or the trend lines or the things that matches its algorithms, its AI for the support and resistance tools, it'll actually notify you on the chart. So good way to find stocks that are moving. Again, I like to find stocks that are already moving and kind of take advantage of the momentum they've got. This is a great way to kind of find stocks that have kind of broken through an important level. Let me know if you have any questions on that. I'm going to kind of move on and kind of talk about 2 more tools that are in MetaStock that I think you should play with. The second one is RMO. If you have some symbols that you would like me to look at, go ahead and put them in the chat now, because I don't really have anything terribly prepared. I can always put some symbols out there, but I'd rather use your symbols. So if you have some symbols you want to look at, I've got the chat open here for both YouTube and GoToWebinar. And so if you put in some symbols in the chat box, I will look at your symbols. Otherwise, I'll make it my own. So let's go ahead and try to jump in here. I want to talk a little bit about RMO, what it is. RMO is a system that we've had in MetaStock since MetaStock 10. So it's a trend following system. I kind of feel like this should be moved back in my side presentation a little bit, but yeah, I'm sure you've heard the cliche, so that the trend is your friend. Rising tide lifts all boats, befriend the trend, all those kind of things. This is a methodology that looks to establish what the trend is, both from a long-term perspective and a short-term perspective, and then to help you take advantage of those trades along the way. Thomas, AVGO will look at. If you have any other symbols, we have room for more. So put them in there. Okay. What happened, and I think I have it right here. There's a few reasons I like to show this. I'll show this to brand new MetaStock users too. The reason I like to show it is here on the screen, but it's very, very simple. You know, with MetaStock, there's so many tools that you can use. You've got the scanner, you can test ideas. You've got really, really cool systems that are built in there that gives you alerts and advice. But I like to show this one because it's something that's built out of the box. It's called the RMO system. It's easy to understand. If I do my job well, you'll understand it. It's objective. I'm not going to be basing any decisions on what I think is going to happen, but what the chart is telling me. It does use stop losses and solid money management strategies to kind of help you capture large pieces of a trend. And it works on a lot of different instruments. LYB, Vicky, you got it. CELZ. Thank you for the symbols, by the way. But those are the reasons I like to show it, because I can come in here, can get a variety of signals. We can kind of look at what the rules are and go through them. And a lot of times it works. It doesn't work all the time, but it works on a lot of different instruments. And if you've got a stock that's in a really good trend that's been moving, those are the kind of stocks that work really, really well for RMO. So let's go ahead and kind of look at it. Before we go further, though, what I'm surprised here is I don't really talk about what Rahul Mohindar is. That's what I was kind of waiting for here. It's not in here. The RMO is called the Rahul Mohindar oscillator, the RMO system. It was developed by a friend of mine, Rahul Mohindar. He's been a partner of MetaStock, a dealer of MetaStock for longer than I've been employed. I think it was the same year or the year before. He started a dealership with MetaStock, and he's been very, very prolific as an educator. In India, he teaches people how to trade. He's got, I think, 5 offices now. He does a lot of guest appearances on CNBC, CNN India. One of the things that was really, really surprising is how well he was doing. One of the challenges that he had as an Indian software distributor back in the 1990s was just the amount of piracy. You could go down on the street and you could buy MetaStock for $1 on a CD. And what happened was his sales started to explode. And he was in our office, they would double, and then they would double again, they would double again. Very, very prolific in terms of the sales that he was doing. And we're like, what are you teaching people how to use? And what he ended up showing us was the RMO system. The RMO system I've probably demoed hundreds of times over the years. I've done it, I've shown it on instruments in, several different countries, probably dozens of different countries on different instruments, whether they're here, US-based instruments or whatever the markets that people were interested in were. And what we ended up doing is he said, okay, the reason my sales are doubling is I show them this RMO model and I'll give it to them, but they have to buy a legal copy of MetaStock. They can't have the $1 CD off of the street. And that's what he was doing that was really, really successful. He showed us the methodology. We purchased exclusive rights to it. This was back in MetaStock 10. It's been in MetaStock 10 and probably one of the best systems in MetaStock. I wouldn't even call it a hidden gem. It's been so popular, but if you don't know about it, you're about to. All right. The goal, since we want to trade with the trend, since we want to befriend the trend, what we want to be able to do is objectively identify the trend. When I start to talk about trends, I'm going to talk about the primary trend or the prevailing trend. That's the long-term trend. The second thing I'm going to talk about is the short-term trend. And then we'll also kind of talk about the medium-term trend. Okay, so if I say primary trend, I mean long-term trend. If I say prevailing trend, I mean long-term trend. Okay, and so let's look at some stocks. The first thing we want to do, if we want to trade objectively around a stock, we want to identify that trend. Let's get into it. All right, let me go into my MetaStock program here. I have quite a number of charts open. I'm just going to kind of close them. I must have been doing something in here late recently. Let me just hit File. And I don't want to close MetaStock. I thought there was close all. Let's start at the beginning. Okay. No. Okay. Open. Okay. What I'm going to do, I've got a bunch of symbols: Tom, Vicky, John, Stuart, I'll thank you for your symbols. Let's go ahead and just type them in and we'll get them loaded up as charts. So I'm going to go to the chart tab right here. I'm going to type in some symbols, avgo.o, LYB, and I could type in as many symbols. If you're new to MetaStock, you can just type in a bunch of symbols here at the top, as long as you just separate them with a space. CELZ.o, AEVA.o, and SFMT.o. Okay, what I want to say here is like, we might not have, I think that's what we'll have time for. Let's go ahead and kind of take a look at them. It's certainly not going to probably spend as much time in all of the charts, but just enough time to kind of review the rules and kind of make sure you understand the methodology. Right here where it says apply template, or just like we did with the dynamic trend, I'm going to come down, I'm going to have this load in, and there's some new versions. Actually with 19, we released some new versions of this that are, I think, a little bit prettier. So I'm going to go with the trade model shaded. It's very, very similar to the old look of the RMO, but it takes advantage of the new charting engine to make a prettier chart, which I like. In fact, I suggested to Rahul that we might want to do it this way. Okay. Okay, it's opening up those charts. And right here, we've got Summit Therapeutics. We've got Ava Technology. We've got Cells, and we've got LYB and AVG. Okay. What I'm going to do now is I'm just going to kind of talk a little bit about how we would use this, okay? And in specific detail, remember we want to identify the trend. And the first step is what we want to be able to do is identify the primary or the prevailing trend, okay? To do that, we're going to use this green indicator at the top. This is called the RMO indicator. And with the RMO indicator, I'm going to say some things that are very objective, okay? One, it's green. Okay, it oscillates from being below zero and above zero, and that's really the only important part of this. Okay, Rahul likes to keep things very, very simple when he tells people how to trade. What we're looking for when we look at the primary trend is we want to say, is it bullish or is it bearish? And the way that we read this indicator is if it's up above zero, like it is right now, okay, then it's bullish. If it's down below zero, like it is here in this situation or this scenario right here, then the RMO is bearish. I'm going to point out too, I'm going to kind of zoom in a little bit here just so we can kind of take a bit of a closer look. But I'm going to point out that when it's up above zero, you have the RMO is bullish. Okay. When it's down below zero, this trend ribbon at the bottom is red and it says RMO is bearish. So you can look at the indicator at the bottom, but you don't necessarily have to. What we want to do is identify, okay, we want to trade with the trend of this particular stock. Is it bullish or bearish? Okay, so if it's bullish, which it is right now, we're allowed to go long. Okay, if it's bearish, we're allowed to go short. Okay, we don't go long just because it goes from down below zero to up above zero according to the RMO trade model rules. What we look for is just what is the bullishness, because there's three steps when we start to kind of identify the trade. Okay, so step one is identify as a bullish or bearish. Right now we've got bullish. That means from that perspective, we're allowed to go long. Okay, very, very simple. All right, if we go, oh, I was wondering why top chat. Okay, I need to turn on chat. All right. All right, cool. The second thing we do, I was wondering why my chat was so empty. Hello, FX Sumish. Hello, Ray God. Hello, Vincenzo. I turned on top chat and nothing was showing up. Okay. Once we've identified the primary trend, again, if it's bullish, we are allowed to buy. If it's bearish, we're allowed to short, and it's not a trigger to enter. The second thing we want to do, obviously, we looked at the long-term trend. If it's going up, we want to trade into the upwards trend. The next thing we want to do is identify the short-term trend. So step one's out of the way, we're bullish, we're allowed to go long. Step two is identify that short-term trend, okay? So what we're gonna do to look at that is I'm gonna go back into the chart of AVGO, and I'm just gonna make this indicator a little bit bigger right now, so you can kind of take a look at it, okay? There's actually two indicators in here. There's a pink indicator, which is a lot more erratic than the green one, and the blue one that's somewhere in the middle. It's not quite as erratic as our pink indicator, but it's a little bit more erratic than the green one. So you might guess, if you guessed already, that the pink one, the more erratic one, is looking at the short-term trend. You're correct. Okay, so right now, the pink indicator, I want you to ignore the blue one for now. Right now, the pink indicator is giving us an idea of what the short-term trend is. Okay, and we read it the same way. So if we're up above zero, this right here is our zero line. If we're above zero, short-term, we're bullish. Okay, so long-term, we've been bullish for a while on AVGO. Short-term, we've been bullish right about since April 24th is where we went from bearish to bullish. Okay. Yeah, if you what we want in terms of our rule sequence is we want the long-term to be bullish and we want the short-term to be bullish. We want them to match. Okay. If we're bullish long-term but bearish short-term, we want to wait. Okay. In order for us to want to kind of structure a trade into a market, we want it to be both long-term bullish and short-term bullish. Very, very simple. Okay. Now the other thing, again, Rahul really doesn't kind of concern himself too much with the size and shape. He doesn't look for it to get overextended or overbought. What he's looking for is it bullish or bearish? He likes to keep it simple. Okay. And I want to kind of point out one other thing before we move on to the next rule. When it's above zero, you can see right here it went from being down below zero to being above zero. As long as it says above zero, it's going to plot blue bars. Okay. As long as it's down below zero, like it is right here, it's going to plot short red bars. Okay. It's that simple. Okay. Looking for questions? We usually don't get too many. All right. If you have questions, let me know. All right. So step one, we want to identify the long-term trend in AVG that's bullish. In AVG, it's also short-term bullish. So if we're looking at this now, we're allowed to make a trade. Okay. There's another rule, rule number 3. We'll get to kind of how these buy and sell signals are generated on the chart and kind of how that works. Okay. And it has to do with the short-term trend, this pink indicator, and the blue trend. Okay. And with the difference being is we're not really concerned about if the blue is above zero or below zero. If it's above zero, it's bullish, but if that's not really kind of what we're concerned about with the medium-term trend. What we're looking for is a relationship between our short-term trend, and I keep saying our short-term trend and our medium-term trend. Okay. When we start to get a little bit more bullish, let's kind of say right here, if we just look at here, we start to get a little bit more bullish in the market, what's going to happen is the short-term trend is going to cross up above the medium-term trend. Okay, happens right here. When that happens, Rahul calls that a shift of momentum, a change of direction, or a shift of force. Okay, and when that happens, that's actually what generates your buy signal on the chart. Okay. Now, if I'm looking at this buy signal, because this is a bullish shift in momentum, I'm not going to buy because from a perspective of long-term bullishness, we're bearish. From a perspective of short-term bullishness, we're bearish. And so from that perspective, we're not going to buy right now. If we're watching this chart, we're more thinking that there's more downside that's available as opposed to anything else. Okay. But let's kind of just play this out a little bit here. If we were watching AVGO and we were in a little bit of a short trade, okay, because we would have been in a short trade, and we'll kind of go through that in a little bit of detail. But if we're watching AVGO and we're kind of short, and all of a sudden short term we start to get bullish, and then long term we start to get bullish, which happens right here. As soon as that momentum shifts all to the bullish side, we're going to change our outlook. And if we're in a short position, we're going to exit. That's one of our exit conditions. Okay. When we exit and when we're bullish long-term and short-term, we've got this shift of momentum. We can start to structure a trade. So we wouldn't structure a long trade here, but once everything starts to line up and this thing looks like it's going to start to take off, that's where we're going to structure the trade. And in that particular case, we're going to structure the trade right here on this bar because this is the bar where all of that happens. Okay. All right. Let's talk about structuring a trade because that's kind of a little bit more in depth and more detailed. And I want to kind of make sure I kind of talk exactly about how to do it. Okay. So this is the bar. I'm going to put a circle around it so I can see the highs and the lows. This is the bar right here that we're actually going to be trading on. Okay, I'm going to delete my vertical line just to kind of make it a little bit easier for both of us to see. Okay, to recap, on this bar, this is the first bar where we've had that shift of momentum to the top side. We went bullish long term, and now we're finally bullish short term. We can structure a trade. Let's do it. Okay, the way that Rahul is going to have you structure a trade, I'm going to grab my horizontal line tool. I'm going to look at the high of this bar, again, where everything kind of lines up. I'm going to look at the bar before it, which is this bar. Okay, I'm going to say, okay, this high is a little bit higher than this bar. So I look at the last two highs. Say, okay, if we start to go up, what I want it to kind of go up above this level, just a little bit above that high. Once it breaks that high, that's my confirmation that, again, the bulls are going to be in charge. Okay, so we don't buy immediately. It could kind of stay in this area. When it channels up above and starts to break into that high area, break through that area, that's when we'd look to structure a buy. In this case, we bought in the very next day, as close to that line as we can. Okay, so we're going to call that line our buy point. I'm going to put 202.46 is where that level is. Okay, I'll keep track of that. We're not going to have a lot of trades in and out of this thing. Now, what I also want to do is I also want to figure out where I'm going to get out. Okay, and I think this is important for trading. We did a whole lesson yesterday on stops and different stop methods and different strategies for getting out of a trade. But I think that's where a lot of people fell when they start to plan their trade, is they don't know, I'm going to buy it, I like it because it's bullish. They don't know where they're going to get out. Rahul has two different methods of getting out that he'll teach. Okay, the first of which is the same as what we were looking at with the highs. You look at the high here, except for you do it with the lows. You look at the low here, you look at the low here, and you would put your exit, your profit, your stop right here. It took me a long time to get to the right word there, but thank you for bearing with me. So if it comes down below the second the low back, the lower of these two lows, that's where I'm going to actually exit. That's one of the methods that he teaches. Okay. The other one that he'll say is to look for a recent support area. So if you wanted to give it a little bit more room, you could come back to here. What I typically do is I'll look for a recent pivot low. Okay. And if you're not sure, if you're not familiar with what a pivot low is, it's very, very simple. What I'm going to do is I'm going to look for a low that's surrounded by two higher lows. Okay, it's that simple. Okay, so right here is where we're looking to buy. Actually, our pivot low, this is a higher low and this is a higher low. This is our pivot low. For that one, I would just go ahead and take that as our stop, because that's where we would be. Okay, or you can pick here. This is a pivot low here too. This is also a pivot low. Okay, I'm going to go ahead and use this one. So I know if I buy AVGO right now, I'm going to buy at 202.46. Okay. If I get out of this stock because I'm wrong, and I'm going to be wrong, I'm going to get out at as close to 181 as I can. Okay. I'll go ahead and write that on the chart as well. 181. Okay. That gives me a few things that I think are important for trading. Okay. One, I know what my entry strategy is. More importantly, I know what my exit strategy is. Okay, I'm not going to wait for AVG to go up a whole bunch and then, okay, where am I going to get out now? I don't wait for that. Okay, I'm not going to wait for it to go down and be like, okay, well, I'm still right about this signal. I'm just going to go ahead and wait until it goes back up, because then I get married to the stock. We're going to be wrong. We want to plan for that, right? So if I know I'm going to get in pretty close to 202.46, if I know, barring like a big earnings gap or something that I'm going to get out about 181, I can have a good idea of what my risk is going to be. Okay, it's about 20 points ish. I'm going to do just rough math here. It's about 20 points on a $200 stock. It's about a 10% initial stop loss. I'm not making that based on a decision of how much I can afford to lose. I'm looking at where support sits. I'm making a decision right there, because the market doesn't care how much I can afford to lose. If I've got a really, really low stop, I might consider, okay, well, is this a trade for me? Do I want one with a lower risk reward ratio? That's a decision I can make because I know these numbers now. Okay. All right, this may not give us, we might have to look at the short example or even this example over here, but because we're not going to get out of this trade. The nice thing is we do get into that trade initially, okay? and it's profitable, and we've been bullish ever since. So right now we're at 202. It's gone up to 250. Great trade if we're looking at it. Great opportunity to go ahead and take advantage of that. But I want to get a little bit more specific about how to move your stops, because that's just as important. But we don't have that opportunity here. Not yet. It's going to happen pretty soon if this stock continues to rise. So let me go back, and we'll just kind of play with it here. Okay, on this last signal that we had. Okay, let's say we were looking at to the long side, or we could do short too. The rules are the same. You just reverse them. I'm going to go ahead and kind of clean up my work a little bit here. Okay, let's say we started looking at here. Okay, we had that change of momentum that gave us the buy signal, but we're bearish. The next day we go bullish long term. I'm just going to grab this tool because it helps me find exactly where it went bullish long term, which was right here, this bar here. So this bar right here is the one we're going to structure our trade again. Okay, I'm going to go ahead and delete everything off of here, and I'm going to do the exact same stuff that we did before. We would have, we're looking at this bar here. I'm going to go ahead and kind of draw a little bit above the high. I'm going to look for that pivot low, which would be my stop. I'm going to put it right here. Okay, and we'll just say here, this is how we structure our trade with an entry at about 177, which it took a couple of days to come up into. Let's see, text line 177. I won't write down the stop. The point of this one is actually to show you how to move the stop. Okay, right here, below the stop would be 155. Okay, so we go ahead and trigger into that trade. There's a nice little gap that makes us happy. It kind of goes sideways for a little bit. Here we have that shift of momentum down. Okay. Here we also go bearish short term. You see where that kind of dips down below zero for a couple of days. You can exit when two go against you. I usually wait for all three. Okay. But then we have that shift of momentum to the top side. Okay. See right here where it shifted back up, and you have that buy signal. So right here, when you're in a trade, the market doesn't go straight up. It goes up in steps. It'll come up a little bit and come down, come up a little bit and come down. So when you see this initial shift of momentum, we kind of expect that, right? When we start to go bearish short term, you can decide to get out at that point, and in that case, it would have been a better idea. But if we're bullish long term, we can continue to hold because we expect pullbacks, okay? When we have that shift of momentum, we had a shift of momentum, a shift of force right here, and we're already in that position. There's two things that Rahul says you can do. The first one is he says you can buy more. I never do that. I always take my initial size at the first. That's optional. The second thing that you should do is move up your stop. And it makes sense, right? If we've moved up in price, we've come back and set a new kind of low area for where our trades are, and we're starting to move back up, it would make sense for us to move up our stop loss down below where that is. And so what I'm going to do right here is where we get the signal. We can use any of the methods that he talks about. We can look at the lows of the day. We can look at the recent pivot low, which is right here. And that's what I'm typically going to do. Okay. And there we go. Okay. So we go up a little bit more. We'd gap down below. We would have gotten that at the open of this part because we're down below our stop, which would have been 213. Okay. And then it kind of goes sideways. It tries to kind of make another rally. I want to point this out too. Okay, so we got in at 177. We got out at 218-ish. Actually, not 218, 213. Close to the open, right? We did have it kind of come back down. Here, it's bullish and we're getting a buy signal. We're out of the trade. We just stopped out because it had an overnight gap down. But I want to point something out. If I'm looking at this, we're bullish long term. We're bullish short term, and I can structure a trade. If I look to structure that trade, I'm going to look at the high here and the high here. We never go back up above that trade, so I never go long again. And that's one of the reasons Rahul wants an additional confirmation. In fact, once we start to get more weakness here and it starts to go down and we start to get bearish, we start to structure a short-term trade instead. So this trade we looked at right here was good. This one, we made some money. And I want to point out, too, I think this is important. I go on a rant here. You're welcome, Tom. All right. FX, if you have questions that are about the trading system, let me know. When you say explain more, I don't know what to say. I really don't. So, but if you have specific questions I can answer, I'd be happy to try. Okay. I am just like lost my train of thought totally there. That happens sometimes when I answer a question. Oh yeah. Okay. Robert Deal.
Yeah.
Yes.
While you're trying to get your train of thought.
I got my train of thought, Greg. You're gonna make me lose.
It's gone now, and it's not coming back. So we might as well just interrupt. Hey, I thought this might be a good time to remind people that the Traders Conference, excuse me, the Traders Summit is coming up on Monday, June 23rd. And if they want to register, you can go to metastock.com/traders-summit.
All right.
Is your thought back?
It was.
All right. I'll let you get back at it. You're doing great.
Yeah, thanks. We used to do a lot of traveling with Robert Deal, the late Robert Deal. Robert was great. Absolutely love Robert. And he was a technician that was a son of a preacher. And you could tell because he'd really get some fire under him when he started talking. One of the things that he always said that stuck with me, though, that bulls will make money, bears will make money, but pigs will get slaughtered. I want to point out we're not trying to get in at the exact bottom of the trade here. We're never buying at the bottom and we're never selling at the low or the high. What we're looking to do is identify good trades, good parts of the trades, and take good chunks out of them. So, Tom, thank you for the symbol. Ooh, it's getting warm in here. All right, let me go ahead and kind of look at LYB. LYB, I'm just going to kind of look at this from a bigger level just because I got about 15 minutes left and I don't want to be here all day. I don't want to be that boring. But I just want to point out, like, for the majority of this chart that's visible, LYB, it's been bearish, okay? Up here, we had a little bit of whipsaw, Armo struggles with whipsaw, but since October of 24, this has been bearish long-term. And for the most part, it's been bearish short-term as well. The price for LYB, Vicky, has gone from like 94 to like 58. It's almost gone half price from where it was when it went bearish. And I would say, from a perspective of if we're looking to stack odds in our favor, if we're only looking to go short while the stock is going down and down and down in price, that's going to help us put the odds in our favor. Okay. And if I could have kind of just visually structure a trade, this would have been great. Like if we kind of went short right about here, and we moved our stop here, and we moved our stop here. Might have stopped out here. I might have restructured a trade and got in right here. But I would say that if we kind of went trade by this, and we're only looking to go short just because we're following the direction of the overall trend, that's going to be beneficial for you. Let's look at CELZ. CELZ is not a stock that I'd like to trade just because it's so range bound on this chart. And I would say that RMO is not a good strategy for this chart either. You can just tell we have had a lot of kind of whipsaws back and forth. This isn't a good strategy to trade with CELZ. So, and it doesn't work with everything. AAV, on the other hand, we've had some pretty good growth lately. We've been bullish. It's gone from $4 to 27, and we've been bullish the whole time. So you can kind of see the difference on that. So, and we'll look at SMT again. We've been bullish for this upward move, but a lot of flatness on this chart. This is a trend following system. It works better with stocks that trend. Robert asked a question, does RMO work better with indices or individual stocks? It's a really good question. You can apply it to S&P. You can apply it to Dow. One of the things that I thought was kind of interesting, we did an interview with Anne-Marie, and she's like, when you buy an ETF, because you can buy the spider, you buy, she was making a case for individual stock selection. I'll just share it with you. I think you can apply it to anything you want to, and you can trade it with anything that you want to. But she was making the case that maybe you should look at individual stocks, because when you buy an ETF, whether it's like a sector ETF, you get the dog, but the way she said it, you get the dog, you get the hair, and you get all the fleas too. What she was saying is like, well, I just really want to focus on the best stocks in there. And so she would gear her analysis towards, okay, what is the market doing? What are the sectors doing? But in addition to that, what are the stocks that are really kind of pushing those sectors forward. So you can apply it with everything though, Robert. I don't have an opinion on gold. I actually try FX, and I don't, from a perspective, I don't, let's see. I haven't looked at gold for a minute. Last time I looked at it, it was a little bit toppy. Gold, if we just want to look at it from an RMO perspective, it's been very, very bullish, and we're pushing new highs, but we're not breaking new highs. So there you go. Yeah. Not too much of an opinion. All right, I want to show you something else though. So what I want to kind of talk a little bit, yeah, if we were trading RMO with gold though, we've been bullish and the price is all-time highs. So I want to talk about one other thing. So, and this is a fun one too. So let me kind of get back into my PowerPoint, get back into my train of thought. And that's the Haguro. So the last one, we've talked about the DT support and resistance levels. We've talked about RMO. I want to talk about Haguro. Now, about 16, 17 something years ago, I was traveling. I was down in Australia, met a gentleman by the name of Gary Burton. Gary Burton was an exhibitor for the Australian Technical Analysis Association. And he's a good friend of mine now, but I had just met him. I was like, hey, Gary, we're next to each other in these booths here. Like, what you up to? What you doing? And I just introduced myself and we struck up a conversation. Me being a nerd and a programming nerd, and him being just somebody that was also a technician, somebody that really likes to look at charts. He's like, oh, I teach courses for the ATAA. I teach people how to do technical analysis. I'm like, oh, that's interesting. Kind of give him an idea of what we did. When I was like, well, what do you teach people? And so I started to talk about some of the different things that he kind of was teaching. A lot of it was based around like support and resistance. But he started talking about a gentleman called Seiko Shimizu. Seiko Shimizu wrote a book called The Japanese Book of Charts. And that really kind of caught my attention, caught my interest. I'm like, really? Okay, so you're teaching people how to use Seiko Shimizu's work based on the Haguro method. So this picture right here is the Haguro battleship. The long story, which was a battleship in World War II. There's also a Haguro mountain range. It's called the Haguro Mountains. And I guess it has some sacred meanings in Japan. But I was very, very interested in this as a concept, the Haguro method. I said, hey, I'm going to be back in the States next week. Why don't you send me some details on this? I'd like to kind of take a look at it because this method that you're talking about seems really cool. And so he said, sure. So I got back. He sent me this big, long PowerPoint. It was like everything he taught, like all of his students. Somebody asked me for it for a few years ago, but it's lost to time for me. He might still have it. But one of the methodologies that was in there that I took interest in was this Haguro methodology. And I was like, hey, this is all very, very objective. It's very codable. I'd like to code it into MetaStock. And I actually coded it myself. I do some programming when I kind of want to. And then the rest of the time I have other people here do the programming, but I built this. So I took his slides. I took the ideas of Seiko Shimizu. I put them all into MetaStock. And I was very, very proud. It was something that we always gave away. I say, hey, if you want this, you can have it. It's just something that was included. And I think in the next version of MetaStock, we started to include it. But at the time, just to kind of, I should wrap up with my thoughts and start talking about this. At the time, I was kind of really, really proud of this. This was like a pretty good programming endeavor of mine. And I liked the methodology. I called my buddy, Dennis Peterson. He was a reviewer of stocks and commodities for us. I'm like, Dennis, I want you to look at this. I think you're going to like it. And he did a lot of reviews for us. But with this one, after I showed it to him, after I walked him through kind of what it was designed to do and what it was looked to do, he really did like it. In fact, he liked it so much he did 2 articles. One of them was to just talk about the methodology and Seiko Shimizu and kind of how it works. The second was to kind of review the MetaStock integration that we did. And one of the things that he said in that interview is probably the biggest compliment I've ever had, because I'm more of a sales guy. I started in sales. I talked to people about sales. But one of the things is like we left everything open. All of the source code to this is open. One of the things that he said in the interview is he liked how well it was integrated, and he thought it was done very, very professional in the way that it was coded. And I didn't expect that, but it was probably one of those compliments that I really enjoyed at the time. So let's talk a little bit about the chart of charts. And I just kind of want to give you an idea for it. We might go a little bit long talking about this, but I think it is worth it. When Seiki Shimizu developed the Haguro method, this is, again, free in every version of MetaStock, he designed it for weekly charts, okay? You can apply it to any chart that you want, but in the work that he did, he'd always talk about it being designed around a weekly chart, 5 days of trading and 2 days of rest, specifically that, okay? On a weekly chart, it's designed to kind of give you support and resistance levels, key levels that Seiki Shimizu outlines in his work, key turning lines, and a fairly accurate forecast of what's coming up. Okay, so again, we're going to play with this on a weekly chart. There's some concepts that I want to talk about. He went in and he classified all of the lines, all of the candlestick types, based on the open, the close, the high, the low, and where the midpoint of that line is. So every single chart, every single bar that exists is going to have an open, a high, a low, close, and a midpoint. There's only a certain amount of combinations that can exist from that midpoint calculation. Okay, so the meaning is different if it goes way up here and the midpoint is here. Okay, and we have all of our bar underneath it. If it starts here and goes up, that's a little bit of a different bar. He classified all of those midpoints, and I'll show you that in a minute. The other thing that was important is in terms of the midpoint, the weekly midpoint, he would use that as support and resistance. Okay, so I'm going to go to one of the charts you selected. Let's do gold. Okay, what I'm going to do is I'm going to just apply the template. I'm going to go to right here to apply template, and the name of the template is of course Haguro. Okay, so I'm going to go ahead and apply that. Okay, and it's going to, I didn't change it to a weekly chart, but I'm going to change it to a weekly chart. And you'll notice there's a midpoint line that kind of comes here. This is the Haguro midpoint line. This is where we're going to treat. This is where we're going to be. This is our support and resistance level. So if we're above this level, we're going to be bullish. If we come back down below it, we can use it as a stop point. And we might also want it to look for it to cross through the midpoint as a change of direction or a change of force. Those are all important things that can happen. What I want to point out about this midpoint is it doesn't always move. So if we're looking at gold, it moved last week. It hasn't moved yet this week. I say yet because we're on Wednesday, right? It didn't move the week before that and the week before that, but it moved this week, okay? The week before that, the week before that, none of these moved until this week. So, and if you're kind of looking at this, trying to kind of figure out why it's moving, you might be a little bit confused because it doesn't move every 3 days or 3 weeks. It doesn't necessarily move every 5 weeks, and it can kind of stay at the same level for quite a while. Like right here, it was quite at that level for quite a time. So how does it move? Okay, where do we move the midpoint? It's based, every time it moves, it is based on the midpoint. It's exact middle of this bar. When we move it is based on the range of the bar, the difference between the high and the low. Okay, so if we look at the high to the low range here, I'm gonna, maybe I could draw this with a trend line real quick. Well, anyway, you can imagine. The high to the low, that range is quite big. It's bigger than this bar, and it's bigger than the bar before it. That's why it moves, okay? Any of these other bars where it doesn't move, the range is smaller than either the bar before or the bar before it. So if I look here, this is a big range bar, okay? It's an important bar, but it's also gonna be bigger than the bar before it, the week before it, and it's going to be bigger than the week before that. Okay, so that's when it moves, only when that range exceeds that. Okay, so I think I've got that written down here. We set a new midpoint line range if the high minus low is greater this week than the previous week and the week before. Okay, and it acts as support and resistance. Okay, so that's the main thing. Well, it's not main thing. There's a whole bunch more in here, but that's one of the main things that he's looking for is he's support and resistance. Where is it? Okay, we're bullish if you can treat it like a support and resistance level. You can add it to your chart. It's based on kind kind of the week in the midpoint of the line. The other thing that Seiko did was he went in and took those bar configurations where the high and the low was compared to the midpoint, where the high and the low was compared to the midpoint and the open and the close, where that happened, and he classified each line. So right here you've got a number 1, a number 2, number 3, number 4, all of the different kind of permutations. On this one, your close is at the very high. Here it's a little bit higher, but these are different values that are available. And all of these lines have different meanings depending on what they are. What kind of is confusing to me and I never got an answer for is, like it goes 1, 2, 3, 4, 5, 6, 7, 8 on this side, right? And for me, it would make sense it went 9, 10, 11, 12, but it seems a little bit misordered for me on this other side, but that's okay. That's beside the point. Each of these lines have meaning. Okay, and in the coding that we did, we used the stuff that Gary had from Seiko's work, and we put all of those meanings into a chart. Okay, so if I want to kind of show that to you, which I do, that's the whole point of this. I'm going to go ahead and come in here, and I've got a scanner open too. I'm going to go ahead and close that just so that it's out of the way. Okay, and you'll see those labels are marked. This one's marked as a 16. This is a 2, this is a 16, a 15, a 2. All of these different candles have different meanings. Okay, a 2 is going to be a very bullish bar. If you want to understand what those meanings are, we've put it in the commentary. So, and you'll notice some of them are different colors. Like this 15 is a reversal candle. These 3s are reversal candles. And so the 15 and the 13, the ones that are likely to read to a reversal, are the ones that we've put in a different color. Okay, now let me show you how to kind of extract the actual meaning. So if I come into the commentary, I'm just gonna, oops, did I just totally get out of, okay, no, okay. Let me go ahead and click on View, Expert Commentary here. Okay, I'm gonna kind of make this a little bit bigger. I'm gonna make the text a little bit bigger too so you can see this. Okay, and we'll just come here. Okay, ignore this range statement now. I'm going to come back to that. This is a candle 16 so far this week. Since it's a candle 16 so far this week, I'm going to actually move to the last completed week, which is this number 2. Okay. I was going to say the range is extended more than 10%. That means the lines are more significant. I guess I'll talk about this now. Okay. One of the things that Seiko talks about is as we get in more extended into trends, the more significant the candle meanings are. Okay, so we've kind of been pushing up here on gold for quite some time. The more we get into that trend, the more important these levels are. Okay, and the method that we actually looked to kind of create that and to kind of measure that is this right here. Just looks at the percent change using zigzag from the last trough. Okay, so that's why it keeps going up. And what we kind of said, we changed this after the coronavirus to be 10 and minus 10, just because things have gotten a lot more volatile. But as long as we're over 10, our candles will have more meaning. Okay, so it's a candle 2. We're extended in range. Like now it's starting to look like it might pull back, and you can kind of see that. But right now for our last completed chart, we're extended in range. And it says when you have a candle 2, when this is a long line, the midpoint is set for future support and resistance for declining prices. Concerning line 2, this appears at the outset of a rise in the market after a fall in prices and further opening price above the midpoint in the following price movement should occur. Okay, wait for next week's price to open above the midpoint of the line if the price closes below the midpoint of the line, close any long positions. So that's how we use it as support and resistance. If we're going up, we're going to be seeing a lot of 2s. Okay, once we close down below the midpoint, that would be an exit sign for us. Okay, now I said the 15s were more important, and that's why they're blue. The 15s and the 3s, very doji-like candles. Like here's one right here before it pulled back a little bit. So I'm just going to read the definition for these. All of these are labeled. Every single chart has a number. If you want to know what that number means, you just have to click on it. It'll tell you. Candle 3 is a strong warning of reversal when found in a high price area, okay, which I would say perfectly describes this first 3. And we did have a bit of a retracement after that, didn't we? Okay. When line 3 is found at a high price area, long positions should be closed within a week. If the opening price of the following week is above the midpoint, selling is still indicated. Short positions should be held. Short positions would only be closed with a closing price above the high price. So there you go. Okay, and here it has a little bit, we have a lot more information. There's even a chart of all the 16 different types. But there you go. That's basically just our third hidden gem of the things that are included in MetaStock. William says, could I summarize the difference between RMO and MACD? That's a really, let me think about that for a second. I appreciate the question. You're kind of making me think a little bit outside. With MACD, it kind of like with MACD, I would say RMO is really measured well to kind of look at the trend and take a look at the overall trend. Rahul likes to keep things very simple. It's a very, very simple, straightforward rule set. Okay. MACD does a really good job of measuring the trend too. I really like the work that Gerald Appel did in terms of looking at the trend. I do like the fact that MACD also has some momentum indicators in there. You can look for MACD to be overbought and oversold. I would say both are a bit laggy because they're looking at the trend. That's kind of, to me, it's a little bit like, I would say they're both prone to whipsaw. MACD is definitely prone to whipsaw and can be prone to whipsaw, so can RMO. So from a perspective of that, I'd say they're very similar. The calculation methods underneath them are quite different as well. So I don't know if that's a great summary, but it's the best one I can come up with right now, William. So in any case, all right. Yeah, that's the Haguro method. We talked about significance. We talked about the significant events. That'd be your candle 3, your candle 15, or when Haguro crosses above the midpoint. If we had a little bit more time, those are the scans that we wrote. Show me all the stocks that have a candle 3, a reversal candle, so I can kind of keep track of them. A candle 15, a reversal candle, or show me stocks that are going from a bullish mode to a bearish mode. Those are the scans that you can run. So all of those are included. There's the RMO info that I was looking for at the front of this presentation. It got very towards the end. Anyway, it got reordered as I was kind of, anyway, not important. Hopefully, if you've been using MetaStock for a while, thank you. I hope this was helpful for you. Play with them if you like them. They're just included in the software. That was the whole point, is to kind of show you some things that I like to play with. If you're new to MetaStock, I'm going to give you a special offer. MetaStock's been rated again for the 32nd year in a row, the best software in its price category. I love working for MetaStock. I scan at least once a day, usually twice, unless I get busy or have to prepare for an afternoon webinar. I wouldn't trade without it. I just love the tools that are in there. I think there's a reason it's been rated so highly for so long. There's so many things that are in MetaStock as well. So we do have two versions. We both update on a streaming basis. We have the real-time version, which you can get real-time delayed or real-time data. We have a delayed version. Our real-time version starts at $210 a month. Also includes the brand new application that was just put together by London Stock Exchange Group called Workspace. A very, very professional news package, great fundamentals, great research information that's available. It's $210 per month with that news package. And to kind of give you an idea of kind of that news package, it was developed, it's called Zenith. It was developed to compete head-to-head with Bloomberg. Bloomberg, just to give you an idea, is like $1,800 a month. So for $210, you get MetaStock plus a lot of really good information, some of the best information on the planet. Okay. If you really just want to kind of play with charts and scan, our MetaStock DC just got a huge upgrade. If we were talking about it last year, what we'd be saying is, yeah, it's end of day. You can use it at night. You can look at your charts, and you can still do that. But we changed it's now MetaStock delayed charts. You can look at daily, weekly, monthly, yearly charts. They'll stream in it. The data usually has about a 15-minute delay. But you can look at charts. You can see what it's doing during the day. You can run scans on intraday data. And all of that's just a huge upgrade that we provided everybody for free. So that's normally $75 per month with MetaStock. And we have a special offer with it. couple other things that I talk about that are just included now in MetaStock. There's tons of hidden gems. In this last one, we included the Ichimoku Master. It helps you identify buy and sell opportunities, help you understand Ichimoku, show support and resistance. The Ichimoku Cloud is such a cool methodology, and now it's included in MetaStock. So that's a bonus that you get just by being a MetaStock owner. It's $400 value. We'd put in a gap identification system that helps you identify and scan for gaps. If you want to buy stocks that had a huge change in investor sentiment overnight, that'd be a gapping stock. But there's a gap identifier where you can run a scan. You can run that scan and find stocks that gapped overnight with either version of the program, because now they both have that delayed data. It helps you understand the gaps, helps you find them, helps you know if they're volume confirmed as well. We did also include, these are just things that we threw in the last version of MetaStock. Michael Murmer ETS, a very, very popular add-on. It's called the Expert Trading System. Michael Murmer wrote it, very, very popular. Helps you scan for entries, exits, all that kind of stuff. This isn't a tool you're going to grow out of. We also had a Jake Bernstein's expansion contraction, which is a very, very cool indicator as well. So, and then if you're new to MetaStock, we're going to include training. We're going to include the Unleash Power of MetaStock, which helps you understand everything. There's a lesson in here on the RMO, not Haguro, but the RMO. It helps you run scanning, testing, helps you understand how to use all those tools. We do a white glove installation support appointment where we'll give you a guided tour of MetaStock, help you with any problems you have. And of course, we give you unlimited access to support. So the offer that we have, if you've never used MetaStock before and you want to find out why it's been rated #1 in its price category for 32 years in a row, is if you buy a month, we'll give you the second and third month for free. So let's say, for example, you spend $75 today. It's June 18th already. Wow, we're halfway through this year. That means for $75, you'll be running it till 9/18, September 18th. Okay, the cost on that's about $25 a month. Summer's a really good time to usually be able to play with software and get used to it. And I will give you all the tools you need to do that. But for $75, you can use this for 3 months. You can find out why it's been rated the best software in its price category. If you have more questions, if you want to talk to us, we'd love to talk to you. Give a call, 800-882-3040, metastock.com/sales-chat. You can also go to metastock.com/3for1. Just looking for any additional questions. I think I got them all. If I missed your question, I'm sorry. I didn't do it on purpose. If you ever want to reach out to me, you can do it at jeffrey.gibby@metastock.com. If you haven't tried MetaStock yet, here's a really good reason to try the software that I wouldn't trade it without. The one that's been rated #1 for 32 years in a row now. Thanks for being here. Thanks for watching this. If you've been using MetaStock for a while, thank you. I appreciate it. And let me know if there's anything I can do for you. Stay healthy, stay well. See you next time.